Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Greg Dickerson. How you doing, sir?
Doing great. Good to see you.
Ah, I like it. I like it. I like
Good
it.
start, good finish, man. Start strong, finish strong.
There you go. I love that. Were you ever a football coach?
No, other sports. I had girls, all
Yeah,
girls. So softball, soccer, basketball.
I like it. You definitely strike me as somebody who'd be an
But I
amazing
coached them like
coach.
football. I'm like, there ain't no crying in sports. I don't want to hear. I don't want to see a tear unless you're bleeding.
Yeah, that's right. We got broken bones or blood, maybe, but that's it.
No, it was fun. We
That's
had a
fun.
good time.
That's funny. That's amazing. You're a great dad, great coach. I got to ask you, we had a surprising, or at least to me, surprisingly low CPI reading last week. At which point, the indices, the stock market risk on is what it appeared like. Uh, I have my suspicion that there might be something subtle happening underneath. But I wanted to ask you, what do you think about Thursday, Friday? Maybe it was Wednesday, Thursday, Friday stock market rally after the CPI reading. What'd you see in there?
Yeah. Nice bear market rally. We're still in a bear market. It was driven by the algorithms and technicals that had that plugged in. I think a lot of people were surprised by the lower read, and I don't think it was an accurate read. I think we're going to find out that the core elements are still a problem. So but anyways, it did come down a little bit lower. A couple of the Fed members, were saying we see softening potentially, but what they're saying is slowing the pace of the hike. They're still saying we got 50 in December.
Yes.
So all of that, though, just like we saw back in what was it, July, when we had that nice rally, same
Mhm.
kind of thing. It's all driven by the hopes of a Fed pivot and algorithmic. Then you get some short covering, and it can get some momentum like we saw, but it was mainly the Dow that really took off. The S&P and NASDAQ had a normal kind of I don't know, 10-15%. The Dow popped up another 20, I think. So that's been
Yeah.
your flight to safety. The big thing that was interesting is the dollar. The dollar
That
sunk
rolled
big
over.
time. Yeah.
Wow.
And treasury yields drop, but that's all risk on, like you said, versus risk off. And the dollar's rebounding a little bit today, so are bonds and things like that, and stocks are retreating. But the Fed is now coming back out and saying, wait a minute, we're you guys are misreading us again. It's not time to
It's
get all excited. And
Yeah, I actually have quotes from Fed Waller this morning. He was quoted. I think this is who you're referring to. Number one quote: Everyone should take a deep breath, calm down. We have a ways to go. He's like, guys, what are you doing?
yeah, it came down what, 0.4%
Yeah,
or whatever, and we're still at almost 8%.
yeah.
That's not good news.
Don't celebrate 7-7. That's not good.
And what the Fed's reiterating is we have much higher to go. Our target's what, 5.5. We got to get
Mhm.
there. We might slow the way and the pace to which we get there if we
Yeah,
see improvement. Again, we've got another read in December before the next Fed meeting. So if that comes
correct.
out softer and the Fed can start stepping down, then you might see the market be able to put a base in. But you're
Mm,
not going to see a return to all-time highs right now without, because again, we're still pulling liquidity out of the system. We're still,
yeah,
the Fed wants tightening financial conditions, and the lower dollar leads to higher inflation. So that's not a good thing either. The Fed wants a strong dollar because
mm,
that's going to keep inflation at bay. So that's their number one job. They got to get after it. Employment is still too strong. The GDP is, was still growing. We're going into the holidays when a lot of people spend, a lot of people travel. So I don't think we're going to see, really, things really land until, like I said, Q1, Q2 next year. We can really
yeah,
start to get in there and say, see what layoffs look like. Because a lot of people aren't going to get laid off till after the first of the year. They're
mm,
going to get carried through the holidays and they get severance and all that. So it's too early to call, return
yeah.
to normal right now. But nice bear market rallies. If you go back and look at all the bear markets we've had in the history, you get some nice 10-20% rallies.
Yeah, one of the conversations I had over the weekend, I think this is accurate. I might be off, but four of the five best single day rallies were in bear markets, right? Percentage wise. So you can get these like really impressive 5, 6, 7% moves in a day. And it's just, you know, to me what last week was really something that I really haven't heard in the media. And that is uh traders, the market, if you will, was set up for another negative reading, right? Because I think we were three inflation readings in a row where it surprised to the upside. Everybody came into that reading, or almost everyone came into that meeting negative, like, oh, gonna be another bad number, gonna be another bad number, myself included. And it went the other way. So I think what happened is I think there was a lot of people short. I think there was a lot of people that had puts. And anytime you have that kind of situation, it's kind of a race to get out, and that can cause some really wild increases. That's what I think happened. Any thoughts on that?
Yeah, yeah, exactly. And I was the same way. I thought, it was going to be equal to or maybe a little bit higher, not
Yeah,
exponentially,
not
but I
exponentially.
just,
Yeah,
me personally, I haven't seen anything come down. I just don't understand where they're even food. They're saying food came down. I'm not seeing that. I'm seeing
I'm
food
not seeing
continue to
that
go
either.
up.
Yeah, yeah.
Yeah, it doesn't make any sense. So I don't know where they're getting their numbers, and who knows what that was all about. But and so the other good news. So some of the things that can, where you need to be to put a bottom is you need inflation to start coming down. You need the Fed to signal that we can slow the pace. But again, they're not going to stop till inflation is down to their target, which ultimately is probably going to be about 2.5%, 3%. I don't know how they're going to get it down to 2% next year, but a lot of people seem to think that's possible.
Yeah.
You know,
Goldman Sachs came out today and said they think it'll be there by the end of 2023. I don't see it. I don't. We're going to talk
it
about
could
that in
be.
video too. But wow,
Yeah, we'll talk
I
about
don't
that
see it.
then. So you need inflation to peak. You need it to start, backing up in a meaningful way where the Fed can take the foot off the gas. And then you can start putting your bottom in for longer term growth. And the sooner that happens, the better. But markets have priced in inflation, markets have priced in interest rate, risk. They haven't priced in a recession. So until we get to next year, we're not going to understand what that looks like, how deep, how long, and all that. So the markets can bottom and start putting that base in. And I mean, they could bottom from here. So again, I don't know what's going to happen. I just know what can happen, and I know what's likely to happen. And we're still in a risk off Fed tightening cycle. They do not want loose financial conditions. They're not happy about this rally.
No, they're not happy.
So
Fed Waller's not happy. Take a deep breath. I mean, that's a pretty clear indication
yeah,
that yeah, it's pretty clear. Yeah, the other thing that is really going on is we started to see significant layoffs. Right, we've had layoffs in mortgage, we've had layoffs in real estate industry. We've had a couple of I heard about layoffs in trucking just the other day, but we obviously had our first big tech layoff. Meta last week announced, I think it was 11,000. Um, I don't know about you, but I think there's a lot more tech layoffs. I think this is going to be a white collar led recession. What do you think about that?
yeah, yeah. And I mean, like all the real estate tech companies are laying off. Other tech companies are freezing hiring, cutting jobs. Especially in the crypto industry. So yeah, and we haven't seen it in housing yet. So in terms of construction, things like that, again, you probably won't see that at scale till to the end of the year. You get into next year where you're going to start potentially seeing some of that. So yeah, interesting times right now. And, we just don't know until we get through the holidays and get into next year what all that's going to look like. That's the problem. We just don't know.
Yeah. So at the end of the day, kind of wrapping up the discussion of the Fed, I think what the Fed is clearly communicating to us, it's actually pretty clear Fed speak, right? Greenspan was the classic of saying lots of word salad and nobody can understand it. I think Powell's team's doing a decent job of being relatively clear. I think what they're telling us is they're going to slow down, i.e., not no longer 75. They're going to try smaller increments. Second, they're going to go higher, right? Their last I don't know. I call it a forecast. They call it something else. Was a high of 4.6. I think that's going higher. And then I think the big thing that the market really hasn't priced in yet. I don't think the market. I think the market gets the first two. I don't think the market believes that the last one, which is they're going to stay there longer, right? I think the Fed's desire are no cuts in 2023. I don't think the market believes that.
Yeah, and I think the market thinks that everything's going to recover. Inflation is going to come down, economy is going to recover. And, so that's the contemplation that's out there right now. I don't know if they just don't believe the Fed. I think they don't believe the economy is going to be in bad shape. And, if you're on Wall Street, you're an analyst, you're an investment manager, how do you make your money? You make your money when the market goes up. You don't make it when it's going down. So they have to stay positive to keep capitals inflowing into the market. So
Got
those are
it.
the narratives you're going to hear.
Well, that's actually an interesting twist. I actually got a question over the weekend that I could ask you here. Um, Obviously, it's almost the end of the year. Wall Street bonuses are around the corner. So, do you think there's a incentive for market makers and whatnot to kind of push the market higher as we get into the end of the year?
Absolutely. That's why you always see the Santa Claus rally, and not always. You can go back and look at the
Yeah.
history, and see it's not always. But yeah, that's why that is. And it's not just bonuses. It's to hold on to their jobs. There's a lot of jobs at risk right now. So if they don't perform between now and the end of the year, they're going to get cut. Wall Street's laying off, and the banks are laying off big time. So yeah, I mean, that's why you get that Santa Claus rally. That's why you're seeing these big rallies now, because the closer we get to the end of the year, the more you're going to see these huge rallies try to make up for lost ground. The problem is they don't have the foundation underneath it to sustain it and keep the momentum going.
Very, very cool. Very exciting stuff. Greg, where can people find you?
Yeah, gregdickerson.com. Go check it
Awesome.
out.
Thank you.